If you are looking to buy a home right now, you may realize that there's just not many options there out on the market.
Not a lot at all. Experts say that's because homeowners who locked in historically low mortgage rates are now reluctant to sell as new mortgage rates skyrocket. According to Freddie Mac, the average interest rate on a 30-year fixed-rate mortgage is up to 6.29%. That's up from 2.88% a year earlier. Joining us now is Odeta Kushi. She is the Deputy Chief Economist for First American Financial Corporation. Odeta, welcome. Thanks very much for joining us. So I was out with a realtor and with a couple that out in suburban New Jersey. This couple had been looking for more than a year. They just could not find, and they haven't been able to find a house yet. When you look at those mortgage numbers, you can certainly understand why inventory might be low, why homeowners might be hesitant to sell right now. One idea that we've heard is for people to rent out their existing properties. Is that a viable option?
It's great to be here. Yeah, so inventory is still near historic lows. The majority of home inventory is existing home inventory, and existing homeowners are staying put. 85% of homeowners with a mortgage have locked into rates below 5%. And so with rates going above 6%, they don't have a financial incentive to sell that home and potentially lock into a higher mortgage rate. And so that's keeping inventory quite low. So for homeowners that are interested in selling, they could either sell or they could rent out their home. That's really both a financial decision, and it will depend on their local market. Rents are still high across the nation, so it could potentially be one option for those homeowners. But of course, if they need the money from the sale of that home to purchase their next home, then a sale is a much better option than renting out their property.
Yeah, and we know these decisions are all so personal, right? It really depends on what your situation is. In the UK, it's relatively common, or had been, for elderly folks to rent out a room in their place. You'd call it having a lodger, right? Someone lodging at your place. But I just don't know if that's feasible right now, considering rents are also raising and high in many places, because a lot of people who would be buying homes have now turned to renting something, and it's jacking up the rates there. So what are the options available to people who are kind of stuck between these two realities?
So for potential first-time homebuyers, to your point, they're facing a very difficult decision. Rents are quite high across the nation, and affordability has declined more than 50% on a year-over-year basis. There is some good news. House prices are decelerating. So we're starting to see annual house price growth start to slow. So that could offset some of the impact from higher mortgage rates. It's also a less competitive market overall. So potential buyers won't be facing multiple offer bidding wars as they were early on in 2022 and last year. So the housing market is rebalancing and getting back to a more reasonable pace, a more sustainable pace.
Yeah, you know, it's interesting you talk about it normalizing, because in some of the conversations that I've been having about real estate, the idea of what happened in the late 2000s is something that people sort of bring up on their own, that housing bubble that happened. I wonder, Odeta, if you see any similarities at all to what took place in the late 2000s, or are we dealing with a completely different kind of situation, given what we saw with the pandemic and that sort of roller coaster in the market, and to the point where we're now looking at these, you know, high interest rates, high prices, low inventory, sort of a confluence of factors now?
Right. Many still bear scars from the Great Recession and are kind of quick to assume that this housing market is similar to that during the mid-2000s, but it's fundamentally different in many ways. So the house price appreciation that we've seen over the last 2 years is a result of a severe supply-demand imbalance in the housing market, so leading to upward pressure on prices. Household balance sheets are much stronger this time around. Lending standards are significantly tighter, and homeowners today have a really strong equity cushion in their properties. They've gained quite a bit of equity because of those house price increases. So very different housing environment than last time.
Yeah, absolutely. And if you can stay in your home, you know, it may be the best decision at this point.
For now, yeah.
For now, considering all the uncertainty. Odeta Kushi, thank you so much for chatting with us.
Thank you.